PSU performance has been very good for the last 1 year, both fundamental as well as the stock wise, right? Having said that, for the banks, PSU banks are largely deposit-led and liquid banks. We are now going to the environment where we are expecting liquidity otherwise to pick up. So perhaps time to look at stocks which has suffered due to lower liquidity. That said, I think the PSU banks have done a good job. They will continue a good job. But stock-wise, I think we look at delta into the stocks which has suffered due to liquidity. And now that liquidity situation getting better, they will benefit from it.
Okay. Which is a sector to completely avoid for people tuning in right now if they're trying to understand, because we are reaching out to viewers not just with ideas to invest in India, but also as an attempt to educate investors about the Indian market, right? So which is the sectors that you must definitely avoid if you're studying the Indian market?
See, that way it's very difficult to term one sector completely avoid, but I can share with you that where we think the valuations are way too high. Not just the companies are bad, the companies are doing what they're doing, but the expectation built into the valuations are very high for by and large the industrial sector. Now, government capex at 3.5% of GDP has peaked. I'm not saying it will come down, but the industrial sector trading at a premium.
How would you explain industrials in India?
Capital goods, mostly capital goods companies. I think these companies which are particularly levered to government spending, I think they will do well. But I think their valuation at 30, 40 times, there's a massive re-rating, right? And given government spending kind of picking out, I think the elevated expectations of the markets might not be met in those segments.
And for the first timers getting into India, you think index funds or index ETFs is the best way to play it? Because just on the index, I left India in 2019. When the Nifty was at 10,000, today it's at 25,000. It's 1.5 times higher. So how do they play the Indian markets for foreign investors, individual investors looking into India?
Sure, no, we would still suggest that Indian market, there are still a lot of inefficiencies. So actively managed fund, I think most of the actively managed funds, they will do better than the market. In fact, I think that is can be said across the market cap criteria, also large cap, mid cap, small cap, or flexi cap, all kind of managers tend to beat the market. So I think active management is the way to go in Indian markets.